Hello, everyone. Good morning to you from this part of the world. It's 9:39 a.m. West African time. That's about 8:39 a.m. UTC. And depending on what time zone you are tuning in from, I want to wish you a good afternoon and good evening. Trust you all had a wonderful weekend. For me, it was a very short one. And I planned to drop some videos during the course of the weekend, but unfortunately, I did had some technical um, development as regards to exporting and editing the video, and we tried everything within our capacity to resolve it, but unfortunately, it was not resolved. But for those of you who are following me on the TradingView platform, you would have seen my weekend review of the gold commodity. It was easier for me to upload on the TradingView platform, but for those of us who are here who did not have the privilege of looking at that, we will be doing a top-down analysis on these assets. So I'm very excited to have you join me this morning as I do have some interesting trading setups that we want to be banking on ahead of the week of the new week. Well, it has been a very good start to the year. We practically started with $1,000 account size, and currently we having a profit of about $30 on top of it, which is about 3% of that portfolio as at this point in time. Remember, the last week did not start very well for us. We had some little bit of setback due to uncertainties in the market, losing about 3%. But at the end of the day, we were able to recoup the loss we incurred and, of course, made some profit on top of it. And for those of you who have been part of that profitable journey, well done and kudos to you. Well, today we are going to be running the usual asset we run, that is the US All Spot, the GBPUSD, and of course the XAUUSD. And if you're a fan of any of these financial instruments, I encourage you to stay tuned in as you do not want to miss out on the valuable idea. So thank you for joining me this morning as we prepare for the new week. Now, for those of you who are joining me for the first time, you're highly welcome on board. You're welcome to the Forex Morning Mastery. This is an educational platform where we come together to have a deep understanding into the market, and of course use that privilege to share with you how I actually take advantage of positions whenever we find them. And to make it a little bit more practical, we have the my account, the dedicated account for the Forex Morning Mastery, shown at the bottom of the screen, which you will be seeing in a moment. So we run this 3 times in a week: Mondays, Wednesdays, and Fridays. So I encourage you to be part of this session as we monitor price action around this asset, and feel free to engage in the comment section. And for everyone, do not forget to give the video a thumbs up. This is one way you inspire me to continue to do more. And secondly, it's the cheapest way you can help this community to grow, as the more likes we have, the better the chances that the YouTube algorithm will push this video to a wider audience of traders who may find this content beneficial to them. So take a moment, click on that like button, and thank you very much as you do so. I see you in the comment section, Tammy Klo. Good morning to you. Well, I had a good weekend and trust you also had a beautiful one too. Happy to have you around with us this morning. So with that being said, here we shall be diving right into the business. And as always, the first thing we normally do during the Forex Morning Mastery is to keep tabs with the fundamental factors that will be influencing the sentiment in the market this week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. And since we are monitoring the US All Spot, the GBPUSD, and the XAUUSD, we shall be focusing on high impactful events from both the United States and the United Kingdom economic docket. Now, in the case where we do not have high impactful event, we will try to include mid-tier economic features so that we can have a broader view into what market participant will be looking forward to guide their trading decision for that particular day. Now, taking all of this into account, the first important event for this week will not be coming until tomorrow, which is the producer price index, an inflationary data, a data known to be a key economic indicator that gives insight into the average change in prices that producers receive for their goods and services. And like I did say earlier, it is also considered to be a key indicator of inflation at the wholesale level. And a rising PPI suggests increasing production costs, which can lead to higher consumer prices, in other words, inflation, and potentially prompt the Fed to raise interest rates, which in the long run strengthens the US dollar. And of course, if there is a falling PPI, this might indicate lower inflation, which could weaken the US dollar if rate cuts are expected. Now, this PPI data will not be coming until tomorrow, 1:30 p.m. UTC. That's about 2:30 p.m. local time. So you do want to be marking out that timing as we want to prepare for this event. Now, besides the producer price index, there are other events we can also take into account. Tomorrow, we are looking at Braden's speech from the United Kingdom. Braden is known to be the Deputy Governor of the Bank of England, so he's going to be giving a speech tomorrow. We want to be looking forward to that one too as well. That's 8:30 a.m. UTC. That's 9:30 a.m. West African time. Then we also have a couple of speeches from the Federal Reserve officials tomorrow. That is Fed Schmidt, which is coming up about 3 p.m. UTC. Then we also have Williams speaking at 8:05 p.m. UTC. So all of these are important events that we want to be looking forward to tomorrow. Now, for today, Monday, January 13th, we really do not have any important event to look forward to except for the monthly budget statement, which gives an insight into, or let me say, summarizes the financial activities of the federal entities, Federal Reserve Bank, and disbursing officer. And of course, a positive budget statement exceeding what market had expected is seen as a bullish sentiment for the US dollar. And on the other hand, a negative figure indicates debt. And of course, if we look at the previous data, we see that the US economy is in a deficit of $367 billion as at last month, November. And for December's projection, we have economists and market participants projecting a deficit of 67.6 billion US dollars, which is way below the previous month data. So we look forward to see what the actual data will be. If it comes in higher than expectations, well, that will be a positive signal for the US dollar. And if it comes in lower, then it might influence a negative traction. So let's look forward to see what that actual data will be. Now, while market participants anticipate this event, we all know that the anticipation of this event usually um, result into certain behavioral patterns, which gives us an insight into how market participants are thinking and digesting the current fundamentals, which of course will reflect on the chart as structural patterns, structural details, and price action. So, talking about price action, let's dive right into the business for today. So, as always, the first asset we are going to be looking at this morning is going to be the US All Spot. And on the US All Sports, well, we've done pretty well since the beginning of the year. Last week, we were buying the US All Sport, remember? And in fact, we hit TP target twice during the course of last week. Though the week did not start very good, remember, we had a couple of losses, but at the end of the day, we were able to recoup the loss incurred and, of course, made some profit on top of it. And for those of you who were part of that profitable journey, who had stayed faithful to our analytical approach, well done and kudos to you. Now, heading into this week, how are we intending to prepare for this for the oil market? Are we going to continue buying this commodity, or are there any chance that could incite selling ideas, maybe as a result of profit-taking activities? Now, before we go into the technical details, it's important that we also take into account the fundamental factors that are influencing the market behind the scenes, influencing the sentiment of market participants. Now, at the moment, there has been new developments over the weekend, which is changing the face of the global market. And of course, I think everything is looking in favor of the US All Spot. At the moment, oil prices are primarily supported by supply disruption, rising demand, and seasonal factors, suggesting that the path of least resistance for the US crude oil seems to be to the upside. And from all I have been able to get from the financial highlights, everything, there are no significant negative drivers, at least for today's trading session. We have supply disruption concerns, where over the weekend there has been new US sanctions on Russian oil producers and transport vessels, and this is expected to disrupt supply in the global market, particularly affecting key markets like China and India. Excuse me. And for me, this may, you see, when there is a disruption in supply, simple economics tells us that demand is definitely going to rise, and when demand rises, price will of course continue to rise. And of course, we saw what happened this morning, as at the opening of the market this morning, we saw this engulfing bullish candle spring out of where price action closed last week to signal the potential of an uptrend scenario and an immediate reaction to the sanctions from the US. Then we also have economic strength in the US economy. Remember, last week, Friday, we saw the NFP recording about 256,000 jobs added in the United States in the month of December, which is quite a resilient figure, showing how the US economy is strong. And of course, this job report signals robust economic activity, and when there is activity, there is movement from one place to another, and this results in boosting energy demand from the United States. And for me, this is another good signal supporting an uptrend scenario. Then if we also look at the seasonal factor, where increased winter energy demand is in play, we have the extended winter weather, and of course consumers will be buying oil to heat up their homes. and this is resulting in higher energy consumption, and this could also drive up prices of crude oil. Then last week, we also saw that there's been a decline in the US stockpile, where both the API and EIA reports indicated a reduction in the US oil inventory. And we know what that means technically. Theoretically, when we see a decline in stockpile, it shows that the demand in the market is way higher than the supply, so they had to go into the stockpile to feed the demand in the market, hereby reducing what they have in their stockpile. So with all of these factors here, it is quite clear that the path of least resistance for crude oil remains to the upside. Now, in today's session, we are going to be delving into the charts to see how the market had actually digested this information and to decipher what path will price action take going forward. And to do this, we do want to be having an holistic perspective into this market. We want to be going into the higher time frame, where I do have a simple structural detail giving us an insight into what the momentum is looking like at the moment. Now, what I did here on the 4 hours time frame was to take into account the character of price action in the last 3 to 4 weeks. And if you do that correctly, you will see that the price of crude oil had continued to rise into the new year. And connecting the pivot lows, you can see we have a couple of ascending trend line to work with. And when you have ascending trend lines, you know how we do it. We'll continue to look out for patterns and structures that supports the idea of buying. Now, in addition to this ascending trend line is my key level, which is duly situated at the $74.50 level. So our key level is what we are going to be using as a yardstick to guide our trading decision for the new week. And you know how we use our key level. We want to. Okay, I just saw a comment drop right now from Tammy Clove. Says, please, the sound is quite low. Really? All right, so I will just try and increase it. Please let me know. Someone, I would like to hear from others too, if truly this is the case, because from my hand here, everything is looking good. Please, can someone else confirm this for me? Okay, good morning, Jonah Aruna. Just saw your comment now. So I would love to know, get your feedbacks. I've increased it a little bit now, so let me know in the comment section what it is sounding like. So where were we? We were talking about the key level for the week, which is a $74.50 area. And in fact, we are going to be using this as a yardstick guiding our trading decisions for the week. And what this simply means is that as long as price remains above the key level, we definitely want to be looking out for long-term buying ideas. And if price drops below the key level, definitely we want to be looking out for selling ideas. And if you look at how the key level had played a significant role in the last week, remember it was initially a selling niche where buyers were finding it difficult to break through that structure. The same thing also happened during the second half of last week, and not until Friday's trading session, especially ahead of the NFP report, we saw a breakthrough of that structure for the first time. And with the situation we have right now, there are two possibilities to look out for here. One of which is the potential for price action coming back to retest the structure, and look at how beautifully that key level lines up with the ascending trend lines we have marked out here. So that's one scenario we are looking forward to, price coming back to retest the structure in anticipation of an uptrend continuation. Now, if we look at the distance between where price action is and the key level, we are talking about over 250 pips to catch there. So we want to see how the new week has begun, how market participants had reacted to the $77 area to decide whether we will be joining that counter trend opportunity, capturing that potential 250 pips move before the uptrend scenario happen, or how we're going to see an uptrend continuation pattern around this area during the early hours of the week to incite the price going further to the upside. So this is what we are going to be looking at, and to do this we will need to scale down into our execution time frame, that is the 1 hour time frame, to have a deep insight into the behavioral patterns of market participants, especially after that new sanction on the Russian oil sector. So okay, I can see a bunch of comments here. Thank you guys, I really appreciate. Jonah Aruna says sound is fine. All inclusive says the sound is low. Tamiklo say it's fine now. And Wokocha Kingdom says the sound is okay. Okay, good morning, C40. Glad to have you around with us this morning too. All right, so I think majority will carry the day. I want to assume that everything is fine. And for all inclusive who says that the sound is low, I would advise that you check the volume of your sound and see. And if that is not the case, probably you want to restart your YouTube app. All right, so please let's do that and see how things plays out. So back into the business. So we are saying now that we want to understand how the market is reacting to the $77 area after the recently announced sanction on Russian oil producers and transport vessels. So to do this, we will scale down into the 1 hour time frame. For those who don't know, the 1 hour time frame is our execution time frame. Now, after doing this and monitoring price action for the first, how many hours now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours, we can see that price action remained confined within the $75.82 level. So this is our support line for this week, and the resistance line at the $77.45 level. Now, this was where price action closed last week, and of course, we've seen signs that buyers have finally broken out of that structure. In fact, found a support on top of it. Now, looking at the structure here, what we are going to be doing to continue or to trade the US oil spot is to monitor price action around either the support line or the resistance line of this range bound structure. And if you look at this closely, I was able to buy. I think I even have 2 buy positions. If you look at the trading panel at the bottom of your screen, you will see that I have 2 buy positions triggered around the resistance line with the hopes that price will continue the uptrend scenario. So I'm very hopeful that this momentum will continue, where this area around the $77 area will be my temporary support line for this resistance line. So I want to maintain a bullish bias, especially after seeing the immediate reaction, which is reflected on the chart as this engulfing bullish candle, an immediate reaction to the sanctions on Russian oil producers. So will the momentum continue? Well, let's see how the market will. Looking out for buying opportunities. Remember, we cannot ignore the potentials that sellers could also come into play. So I'm not saying it's going to be a long-term sell. It could be a short-term one where some profit-taking activities could happen, especially those who had captured this uptrend scenario may decide that they want to start taking some profits off the chart, and this could lead to short-term selling ideas. Now, if that is going to be the case, How do we intend? Are we planning to jump into that sell? If you would ask me, I will say no, because I rather want to look out for long-term trading ideas from this particular structure. So what I will do here is to wait and see price drop, maybe down into the support line. Hold on a second. I don't know why my arrows are not showing. I hope we are still online. I hope we are still live. Let me check my dashboard because my chat is saying that I am offline. Let me refresh this page and let's see what is going on here. Are we still live? Okay, let me see. Okay, we are still live, of course. We are still live. All right. So we go back to the 1 hour time frame again. So I was saying here that I want to maintain a bullish bias. Now, if you are a scalper who is looking out for short-term trading ideas, well, a breakdown retest of the $77 area could be a sweet opportunity to join a counter trend move, maybe back into the $75.82 area. That is the stop loss, sorry, the support line for that range bound structure. Or if it goes on to break down, then we could be looking at the key level and this ascending trend line we spotted on the 4 hours time frame as TP target, and that will dovetail to a minimum of 120 pips to a maximum of 240 pips. So personally, I maintain a bullish bias, but if a breakdown retest of the $77 area happens, then we could look out for selling ideas. Now, I want to state this here. If we sell, please, as soon as price gets close to the support line of that range, move your stop losses on the sell position, secure that position while we wait and see how the market will react to the structure. If it happens that price breakdown retest the $75.82 level, then this could welcome more selling ideas back into the structure, where we will look out for maybe double bottom structures, inverse head and shoulder pattern to continue that uptrend move. So that is simply how I will look out for any form of counter trend opportunities around this area. But trust me, I will definitely be with you in the comment section of my Telegram platform to give you an update on what I think will happen if price action ever gets close to those areas. But keep this in mind, mark out those levels and structures, as they will be important to guide our decisions for today. So this is my simple view on the US All Spot. I maintain a bullish bias at the moment, and it appears our sell position is currently running in a loss of about $4 thereabouts. So let's be hopeful and see how this is going to play out today. And for those of you who had bought and worried that prices we are in a loss, please don't worry. The week is still very, very early. And even if we lose this position, we still have about 4.5 days to recoup whatever losses incurred. So this is where risk management comes into play. Now, if you risk too much on a particular trade, you tend to not be able to follow through with your trading plan. But if you risk as little as possible, or let me put it this way, you risk what your emotions can handle. If you even get out of that trade in a loss, you are willing to jump back into the trade when the setup lines up with what your expectations are. So please risk as little as possible, which is very subjective. I can't tell you what to risk on your own trade, but risk as little as possible. Risk what your emotions can handle. So that is my opinion on that one. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. Okay, so in the absence of no questions, I want to assume that we are all on the same page. So with that said, let's jump right into the next asset on our watch list. And thank you very much for the support. Let's continue to click on that like button. The more likes we have, the better the chances that the algorithm push the video to a wider audience of traders. So let's make the like tally with the number of people on board. Thank you very much as you do so. So the next asset we are looking at this morning is the GBP USD, the British pounds against the US dollar. So fans of the GBP USD, you don't want to miss out on this one. This morning, remember we sold the GBP USD most of the part of last week, though at the beginning we bought. I think we had a couple of losses on the GBP USD as well, where I can remember on Wednesday we were talking about if we can just make break even on the GBP USD for the week. And fortunately for us, we saw how prices of the British pounds continues to drop to the downside. And in fact, the trade we took on Thursday stroke Friday just hit TP targets this morning. Let me show you from my history here. You can see the second one right up there. I had my T at 1.215. So this morning around 3:37 a.m. we saw about 110 pips its TP target for this week. So well done everyone who was part of that profitable journey. So can we see more opportunities to capitalize on today? As you all know from what we talked about last week, the British pound continues to face substantial headwinds from economic and fiscal concerns alongside a stronger US dollar. However, I'm of the opinion that the oversold condition and potential technical correction may offer some limited support for the British pound. I'm not saying that we might see buying opportunities now. I'm just trying to open up our mindset towards the potentials that buyers could come into play, as the overall outlook still remains bearish depending on significant changes in the fundamentals or technical breakthrough. Now, before we go into the technical details of what this is going to be looking like today, let's quickly take an insight into the drivers of the potential driver for the sentiment surrounding this market this week. And if you would ask me, the only thing that I think will favor the British pound this week is going to be from the technical side of it, which is definitely the oversold technical conditions. You can see right here on the higher time frame, price is in fact at its lowest point, and because of this situation, chances are that we may see a retracement back into structure. Well, this is from a technical perspective. It's not really a fundamental thing to say around this area. But if we take a look at the fundamentals, in fact, the path of least resistance still remains to the downside. We have a strong US dollar sentiment at this moment, which has been supported by expectations that the Federal Reserve will pause its interest rate cutting cycle, further putting pressure on the GBP USD. Then we also have the fiscal health anxiety, where concerns about the UK's fiscal health situation continue to drive bearish sentiment. concerns like stagflation. For those who don't know what stagflation means, it is a statement used by financial experts to explain how people are worried that the United Kingdom economy might face this term called stagflation. Is a tough situation where the economy slows down. There is low or no growth in the economy. Prices keep rising, that is high inflation, and unemployment stays very high. So this makes the British pound less attractive to investors at this point in time, leading to its drop in value. So if you would ask me, the path of least resistance still remains to the downside, but if we look at things from a technical standpoint, there are chances that buyers could come into play. Now let's look into the chart and see how the market is digesting what is really going on at the moment. And what I did here was to start my analysis on the 4 hours time frame, and I didn't go too far. I just went to the beginning of the month of December, where it is clearly revealed here that the momentum is bearish. So what I did was to mark out the support of this bearish sentiment, and you can see after connecting the series of lower lows, we have a couple of descending trend line to work with, as you will see here. And in addition to this descending trend line is my key level for the week, situated at that psychological area at the 1.2200 level, just right sharing a confluence with both of that descending trend line. And as at the end of last week trading session, we did saw price settle around the 1.2200 level with the intent of probably doing a retracement back to the upside. But as you will see, the new week started on a strong bearish note, a move I missed out on. This actually happened during the Asian session, so I was really fast asleep when this whole situation happened. We saw price drop to the downside. I think we will see things more clearly when we scale down into our execution time frame, which is the 1 hour time frame. So right into the 1 hour time frame. Well, first of all, let me do something quickly before price action does something before anything serious happen here. So 1.21227, let me just place a sell stop order right there now. So we have 1.22, hold on a second, 1.21233, 1.21233. So I will just place a sell stop order right there, and I will explain to you why I have done so. So let's go back into the chart here. So this is my key level for this week at the 1.2200 level, right? And that key level here also played a role in establishing a resistant line for this week around the 22100 area. That was a typographical error. Let me do that correctly now. So we have 1.2200 area, 1.22000 level, and then we have the support line here at 1.21250. So let me do that, 1.21250. So that's the support line for this week. So you can see we have the resistance line established around our key level, and you saw how price dropped significantly to the downside, giving us a support line to work with around the 1.21250 area. Now you know how we do it in this community when we establish a range bound structure. Like this, we want to exercise patience, waiting for the negotiation between the buyers and sellers to finalize. And if it does finalize, we will see this reflect on the chart as either a breakout of the resistance line to give us buying ideas, or the breakdown of the support line to give us selling ideas. And if we consider all of which we have talked about so far, from the from the negative driver for the British pound, the stagflation concerns, the fiscal health anxiety, and of course the strong US dollar sentiment, well, the path still looking to the downside. So I already placed a sell stop order below the support line of this range bound structure with the hopes that price will continue this downtrend move. So let's see how this is going to play out today. Stop losses, well, let's place it at the highest point here. 1.21750 is looking promising. That's about 50 pips of stop loss here. So 1.21750, and then 1.21750. All right, so let's see what happens with the GBPUSD on this one. Will the bearish momentum continue, or are there chances that this descending trend lines will be breached to incite a temporary reversal setup? So that is what we are looking at today, and the only condition that will make me buy is for price to break out of that key level today. So I will definitely be giving us an update as at when due on my Telegram platform if any significant setup evolve on the chart. So that is my simple view on the GBPUSD. I do hope I made myself very, very clear. But if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will take about 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. And don't forget to mark out those levels accordingly on your chart, as they will be necessary in helping us to guide our trading decisions for this week. All right. So I see you all inclusive. Okay, he says the sound is fine now. Great, glad to hear that. All right. I think we just have our GBPUSD triggered now. The sell position just got triggered. So let's be hopeful that this will be a very good one for us today. Or anything will happen. I'm not too excited about it. It could still reverse. The possibility of reversal is still there. And I do hope you are risking as little as possible. We are not trying to make all the profit we are supposed to make in a year just in one day. Slow and steady wins the race. So let's see how we will slowly and steadily scoop some money from the market. All right. In the absence of no questions, I want to assume that we are all on the same page. And I can still see that some of us are yet to click on that like button. If you're yet to do so, this is the only way you can support this community to grow. So please do so right away. We have over 13 people or 15 people on board, and we only have 8 likes. So let's make sure the like tally with the number of people on board. Thank you very much, guys, as you do so. So with that said, here we will be moving on to the final asset on our watch list for this week. Stay tuned in, guys. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And last week was an interesting week for us all, as we, despite the strong US dollar, we saw the gold commodity continue to rise amidst the strength in the US dollar, and this was very well attributed to the indecision in the market as a result to the incoming Trump's administration's direction. And of course, while gold benefited from geopolitical risk and weaker risk sentiment, hawkish Fed expectations, rising bond yields, and a strong US dollar appear to be posing significant challenges to sustain this upside movement. And of course, we are going to be taking this into account while we review the current market dynamics today. Now, before we go into the technical details, remember I did not share this video, my weekend video on the gold commodity for this weekend on my YouTube channel due to some technical issues which we were not able to resolve. However, for those of you who are following me on the TradingView platform, you definitely must have seen my video on the gold commodity. But I will take some time to take us through from the 4 hours time frame what I am looking at for this week. But before I do so, let's talk about the drivers that will be influencing the sentiment in the market this week. Now, so far, since the beginning of the year, we have seen geopolitical tensions where persistent geopolitical risk, including Russian military action in Ukraine, Israeli strikes in Lebanon and Gaza, which obviously and traditionally boosts the demand for safe haven asset like gold. Then we also have the risk-off mood in the equity markets, which obviously also supports appeal for safe haven asset. And then we also saw the upbeat in the non-farm payroll data, where a strong U.S. non-farm payroll report suggests economic resilience, but the associated risk-off sentiment also bolsters the gold commodity as well. Then, and as regards to the situation in Israel, Lebanon, remember I talked about this last month or so about the ceasefire agreement between both parties, which led to a cool down in the altercation. But as at yesterday, there was an escalating conflict where Israel violated the ceasefire situation and started striking inside Lebanon, and this could amplify the attractiveness for gold as a hedge against global instability. So I'm still thinking, even though the US dollar is strong, there is more room to the upside for gold. Now, in as much as things are looking a little bit bullish for gold, we cannot ignore the potentials that sellers could also come into play. And if we consider the hawkish Federal Reserve outlook, where expectations that the Fed will pause its interest rate cutting cycle, this could limit aggressive bullish bets on gold. And then we also have the elevated US Treasury bond yield. Currently, the US Treasury bond yield is at its highest point right now, and we do know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is rising, it is expected that the US dollar will rise as well. And if it falls, the same thing also happens to the US dollar. So at this point in time, a high US Treasury bond yield could reduce the appeal for of non-yielding asset like gold, where as the US dollar rises, gold becomes much more expensive to buy. And if we also talk about the investors in this market cautious approach ahead of the US inflation figures, which is going to be coming up later in the week. I showed us something earlier. We are looking at the producer price index on Tuesday. We're also looking at the consumer price index on Wednesday. These are inflationary data, and this could lead to major key players stepping aside, waiting for this data to come in before making any aggressive bet. And this could lead into a situation where the price of gold goes through an extended sideways trading activity. And in fact, we begin to notice this happen since the beginning of the week, as price is confined within the 2692 and the 2684. Now let's take a quick look at what things are looking like on the higher time frame. So my point of reference for the higher time frame for this week is on the 4 hours time frame, and what I did here was to take into account the character of price action since the mid-month of December. Now, ever since price broke down this 2,700 in December, we have seen price action evolve into an ascending channel. As you will see, price continue to find higher highs and higher lows. If we connect the series of higher highs, you can see we have the resistant line of that ascending channel, and when we connect the series of higher lows here, we have the support line of the ascending channel. Now, my key level for this week is duly situated at that psychological level at the 2,650, where if price remains above that key level, the uptrend scenario still remains intact, and if price drops below the 650, then we are likely going to be seeing a reversal. Now, price action is back within the 2,700 area. Remember, the last time price was here was in December, and what happened? Selling pressure resumed from that area. So this whole area around the 2,700 has a strong memory for selling pressure. Now, will this be the case this week, where sellers will persist and then incite a move back into the support line of the ascending channel, which interestingly shares a confluence with our key level at the 2,650? And of course, if we look at the numbers here, we are looking at over 350 pips to catch if that is going to be the case. Or how are we going to see price action break out of the resistant line of that ascending channel to incite an uptrend move? And look at how price action is consolidating around the resistant line here, which is closer to that selling niche at the 2,700 area, making us realize that we are at a crucial juncture. Now, how is the market going to be reacting to the price around the structure, especially after considering all of the fundamental factors we've talked about earlier? Now, to have a clearer picture, we shall scale down into our 1 hour time frame. And when we do that, you can see how the consolidation persists around the resistant line of that ascending channel. So I was able to mark out a range bound structure where you will see here in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. The 11 hours price action has been confined within the 2,693.50 and the 2,679.50 to emphasize the prevailing uncertainty at this point in time. However, after taking into account the recent uptrend scenario on the XAUUSD, and of course this sharp rejection of the support line here, closing with a hammer candle, and of course, you know, when we see hammer candles pattern, this is a theoretical sign that buyers are still present in the market. I placed a buy around the around here, which unfortunately has been taken out at this point in time. Now, I will exercise patience right now. I want to see how the market will play around this area before making any informed decision. So what I will do right now, you know how we use our range bound structure. We want to wait and see if price will break down the support line to give us selling ideas, or break out of the resistance line to give us buying ideas. So what I will do now is place a sell stop order and a buy stop order at both ends. So we have sell stop order below the support line of that range bound structure. So I'm going to be doing that right now. You will see it reflect in the trading panel below. So I just placed a sell stop order right now. Then I will place a buy stop order above the resistance line of that range bound structure. So we shall be on standby to capitalize on whatever opportunity the market presents to us from this particular area. So that is what I'm looking at today. And of course, we are going to be running the Go-Go Challenge in about an hour or two from now, where we shall be scalping this market within this range-bound structure. So on the Forex Morning Mastery, we are looking at a swing trading approach. So that is my view as regards to this current structure. We will, at this point, continue to exercise patience, waiting for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And for the sell, I'm looking at my TP target around the 2,652. That's approximately 320 pips to catch there. So let me just place that right away so that I will not forget. And for the buy, what are we going to be looking at here? So let's use our extension tool. Let's project this impulse leg. So if we do that correctly using our Fibonacci extension tool, running it through the previous impulse leg, we aim at an area between the 127.2 and the 161.8. So I will just take the 2,720 as an area to place my TP target for the buy position. So let's see what happens going forward, and if it's possible for me to buy even before the breakout of the resistance line happen, I will definitely update us on both my trading view and Telegram platform. So this is my simple view on the XAUUSD for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. Namaskaram, Manjun Arun. Glad to have you around. Trust you had a good weekend. All right, so in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys as we took on the 3 instruments on our watch list, which includes the USOILSPOT, GBPUSD, and of course the XAUUSD. And interesting enough, we were able to identify simple trading setups that we are going to be using to navigate this market today. I do hope we all marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do now is exercise patience and allow the structures to mature. And definitely I will be updating us accordingly on both my TradingView and Telegram platform if any new trading setup evolves on the chart. And for those who join us for the first time, I do hope you have found this session helpful and useful in making your independent trading decisions. And if you have done so, you want to be part of the subsequent editions, as the more time you spend with us, the better you get to understand my analytical approach. So looking forward to seeing you all on Wednesday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done and of course prepare for the second half of the week. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.